And it is time for the word on Wall Street. Top investors watching your money. Joining me right now is Michael Lee Strategy founder, Michael Lee, market strategist, Catherine Rooney Vera, and Leo Kelly with us this morning. Great to see everybody. Thanks for being here. Catherine, kicking things off with you. We want to look at markets ahead of a busy earnings season as well as some economic data this week. We got the Consumer Price Index out this week. Wednesday, economists are expecting a month-over-month increase of 0.4% and a year-over-year rise of 5%. We're also getting the April PPI, Producer Price Index, out on Thursday. Catherine, your expectations and what's priced into the market at this point?
Expecting both data points to show an acceleration month over month. That's sequential numbers.
Big event this week will be the debt ceiling negotiations. We've got congressional leadership meeting with President Biden tomorrow. We'll see what comes out of that meeting. Kevin McCarthy is saying that we have to see spending cuts and limitations if we are going to raise the debt ceiling. Do you expect a move in markets as a result of this? In the middle of first quarter earnings, of course, we've got PayPal reporting after the bell tonight. Airbnb tomorrow, and Disney coming out on Wednesday. That's probably the most watched of them all, Disney's report. Mike, your expectations on the week?
Yeah, look, the market really looked at the jobs number and Apple earnings on Friday in a very, very positive light. I would say I'm not sure why, because most of the job growth on Friday was from statistical adjustments in the birth-death model, and the prior 2 months job growth was revised down by 30%. Not the statistical adjustments that they were overstated and then have been revised because every monthly payroll number gets revised twice. Okay, Apple's earnings were ahead of expectations. They did beat on iPhone sales, but the revenue was down over 4% year over year. And when you add over 5% inflation, that means adjusted for inflation, their revenue was down 10% year over year, yet the market was doing backflips for joy with that number. So far this quarter, earnings overall have come in declining a little over 2% when the expectation was for decline of close to 7%. A lot of that is from Apple, from Amazon, and from the large banks being able to take their deposit money, pay zero, park it at the Fed, and make close to 5%. So a lot of window dressing on earnings, but they have nonetheless come in better than expected. So I would expect more of the same this week. We'll see how Disney plays out, given how bad Paramount did in their streaming business last week. But I think the story with Disney is going to be one of cost cuts. Is the market going to be satisfied with the cost cuts coming out of Disney? And then obviously this debt ceiling, I think a lot of the drama that we're reading about is meant to help the Biden administration, because there's more than enough money coming into the Treasury on a daily basis to service the debt, Social Security, Medicare, and some other entitlement programs. And after that, Janet Yellen has to make a prioritization of payments if the debt ceiling is not increased. And of course, there's talk about using the 14th Amendment to just walk around Congress and not actually use Congress to increase the debt ceiling, but which for this administration would be par for the course to just do whatever they want.
Well, I mean, no doubt, in the middle of all of this, lawmakers and the Treasury Secretary are also watching the regional banks, Leo. We're looking at an effort to stabilize